Good evening, I'm Diane and you're watching ViuTV News. Coming up on tonight's show. Bond Connect cross-border trading scheme launches, giving global traders access to the mainland market via Hong Kong. Carrie Lam makes education a top priority on her first day at the office as the city's chief executive. And Shinzo Abe is left reeling after elections in Tokyo sees the Prime Minister's party hit with a historic defeat. Well, good evening. Day one in office for Chief Executive Carrie Lam, and she's already getting right to work. Lam said first up on the Executive Council's agenda is to discuss about pumping an extra $5 billion into recurrent education spending, one of her key election pledges. And among the hot potatoes she has to deal with is her predecessor Siwa Leung's plan to scrap the MPF offsetting mechanism and promising to inject $7.9 billion to tide businesses over. Lam said she's not ruling out giving companies more financial support. In response to calls to reopen the protest area outside the government headquarters known as Civic Square, Lam said she would actively consider the idea because it doesn't look good for the government. But Demosisto lawmaker Nathan Law is not impressed by the gesture.
And I don't think that by just opening the Civic Square, Carrie Lam could mend the rift or to reach a reconciliation, because there are so many political suppression applied for the political descendants in Hong Kong. For example, they are trying to unseat the legislators. And there's been massive political prosecution. And also, for the past few days, you could see the collaboration of the patriotic mob, the police, and the mainland secret force.
Now, the CE also spoke about the controversial Article 23 national security law, stating that the government has to play a proactive role and will talk to different political parties about people's worries. Meanwhile, the Vice Chairwoman of the Basic Law Committee, Elsie Leung, says Hong Kong has a constitutional responsibility to introduce the law. But she rejected claims that President Xi Jinping or Beijing has in any way pressured the government to enact it.
The
government is obligated to lead the discussion. We have to understand that the Article 23 isn't meant for the central government to clamp down on Hong Kong people's freedom. We as citizens have the responsibility to protect national security. I can tell Carrie Lam as the new chief executive has the confidence and determination to carry it out.
China has called the presence of a U.S. warship near a disputed island in the South China Sea, quote, a serious political and military provocation. The USS Stetham sailed close to Triton Island, part of the Paracel Island chain, claimed by Beijing and others. China's foreign ministry says battleships and fighter jets were deployed to warn it off. But the U.S. says it's a freedom of navigation operation meant to show the United States doesn't recognize any claims in the area. A similar drill caused rifts between Washington and Beijing in late May. Saudi Arabia and 3 allies accusing Qatar of supporting terrorism have given Doha 2 more days to meet their demands. As Grace Lee reports, the Arab coalition has made it clear that the demands are not up for negotiation.
An intense ultimatum in the Middle East put on ice for now. A Saudi-led coalition extending Qatar's Sunday deadline to accept a list of demands or get hit by additional sanctions. They've accused Doha of supporting terrorism and allying with regional rival Iran, charges that Qatar denies. The 48-hour extension was requested by Kuwait. It's been acting as a mediator between the two sides. Saudi Arabia and its allies first issued the demands last month after severing diplomatic ties with Qatar. Doha fired back over the weekend, saying the ultimatum isn't meant to tackle terrorism, but to challenge its national sovereignty.
This list of demands made to be rejected. It's not made to be accepted or not made to be negotiated.
The list includes downgrading ties with Iran, closing a Turkish airbase, and even shutting down the Al Jazeera satellite channel. Qatar has been warned the demands are not negotiable. The White House says President Donald Trump reached out to leaders of both Saudi Arabia and Qatar on Sunday to voice concern over the dispute and stress unity in the fight against terrorism in the Middle East. Top officials from the Arab coalition will meet in Cairo on Wednesday to follow up on their demands.
All right, coming up next, the latest from the world of business. Well, We kick off with a big day for markets here in Hong Kong. Today marks the first day of the much-anticipated Bond Connect program between Hong Kong's exchange and China, which will allow foreign investors to buy Chinese government debt. Evelina Leung has more.
Barely days after obsessing over Hong Kong and China's political unity, and it's the financial links between them that are now in focus. This morning marked the opening of Bond Connect at the Hong Kong Stock Exchange. It's a new program giving international investors access to China's huge government debt market.
After months of detailed preparation by the Central People's Government, the Hong Kong SAR government and the relevant institutions in both places, we are about to witness the launch of Bond Connect. Bond Connect marks another new chapter in the development of mutual capital markets access between the mainland and Hong Kong.
The new program means that institutional investors like banks and investment funds can buy and sell Chinese bonds through Hong Kong in what will be known as northbound trading. So-called southbound trading, which would be Chinese investors trading Hong Kong and overseas bonds, is not yet permitted. Within minutes of opening, billions of yuan worth of assets were already being traded.
I expect it to become the most significant channel facilitating new international access and participation in China's interbank bond market and will enhance its price discovery and liquidity. It further strengthens Hong Kong's position as an international financial center.
China is the world's third largest bond market in the world, worth an estimated $9 trillion. Until now, overseas holdings were less than 2%. By allowing an increase in the supply of yuan-dominated assets held by foreign investors, Beijing is also trying to internationalize its currency. The move is the latest in a series of efforts to liberalize and strengthen China's capital markets. The new program follows a similar one called Stock Connect, which launched in 2014 to connect the Shanghai and Hong Kong stock exchanges.
You know, the fact that they're betting on Hong Kong with these pilots indicates to the extent that, you know, attempts to use onshore pilot programs have failed. I mean, the reason the Bond Connect is running is because of a lack of enthusiasm for QFII and these other programs, right? The reason you have the Shanghai, Hong Kong Stock Connect, these other things, is partly because, you know, people are quite anxious about the state of governance.
It's no coincidence that this launch comes as Hong Kong marks 20 years since the handover. The hopes here, no doubt, are that this new program will help secure its financial status for the next 20 to come.
Meanwhile, positive data out of China today will buoy sentiment there. The country's manufacturing was seen up in June, growing at its fastest for 3 months. Data from the Caixin market showed that factories in the world's second-largest economy cranked back into growth mode after unexpectedly slipping in June. New orders and production were up in a sign of modest recovery, according to a private survey which collects reactions from purchasing managers across the country. Recent data suggests that recent economic strength in China is dependent on heavy industry and continued government stimulus. Well, let's take a look at how that affected markets. Here in Hong Kong, we saw the benchmark Hang Seng finish almost flat. The index of leading shares was up 0.08% at the close, finishing on just over 25,784 points. HSBC was one of the first to trade using Bond Connect. It saw shares rise by 1.24% at the close. Financials in general seeing a bounce from increased access to China. Blue chips underperforming overall, though, with the telecoms and utilities sectors dragging the index down. Well, it looks like it's going to be a busy week for global markets. One of the biggest events that investors will be looking at is, of course, the G20, where climate change and environmental issues are expected to be a divisive issue. Many will also be looking signs of the sort of hawkish moves on monetary policy that gave markets around the world jitters last week. David Pollard has more.
The port city of Hamburg, venue for the coming G20 summit. With protests planned, it's not all likely to be plain sailing. There might even be waves in the conference halls too.
The international risks have hardly been greater than they are now, and yet the United States decided to withdraw from the Paris Climate Agreement.
For markets, the tension is over central banks. The euro and sterling leapt last week on hints of tightening from the ECB and the BOE. European equities ended June on a loss. Traders hoping this week they won't repeat it.
We're in that summer period where they don't tend to go anywhere, really, at least on average. They might struggle to make sustained gains until September, October, but I would not be surprised to see dips firmly bought throughout the rest of this year and into 2018, with the continued secular bull market pushing into its 5th year.
But with a packed data diary, some volatility is likely. Industrial output numbers from Germany, France and Britain, plus PMIs from across the globe. And then, end of the week, the big one. US non-farm payrolls.
The focus will be there, again, not on the jobs number itself, but the wage figures. Is there an increase in wages? Does it justify the Fed's optimism about the US economy? Does it justify the move in June?
And for Britain, a similar question. Will a host of retail trading statements from the likes of Ocado and Sainsbury's provide more sustenance for the hawks at the Bank of England, or confirm UK consumers are steadily losing their appetite for buying?
Well, while markets are trying to keep their feet planted firmly on the ground in Nevada, consumers have got their heads in the clouds. The American state is the only one where both gambling and prostitution are legal, and now it's added recreational marijuana use to its list of legitimate adult vices. Sales kicked off over the weekend in more than a dozen shops there. You wouldn't exactly say it was low-key either, with a rapturous reception, as you can see. The state joins 4 others and the District of Columbia in legalizing pot. Authorized shops will be able to sell up to an ounce, which is 28 grams, but only to customers aged 21 or older. It also means the state can tax sales, which has long been an argument for legalization. Well, time for a break, but there's plenty more to come, including CNN hitting back at Donald Trump after the U.S. president posts a video of himself striking a man with the broadcaster's logo superimposed over his head.